Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for May 21st, 2025. Doing this late because I was traveling, hadn't planned on doing one, but I think it was worth talking about what we saw in the market. So weakness in the bonds leads to rates higher and stocks lower. I mean, simple as that. It was pretty obvious when we saw the 30-year go above 5% that we were going to see certain things go up and certain things go down, and the yields went up. Bonds went down. Take a look at homebuilders at one point if you want to see something else that went down. As always, these are for educational only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of the videos demonstrate the tools of top-down analysis, how I apply them, and trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in the report. Trading stops and options should be considered risky. You should consult with your financial advisor before making trades. I have tools for multiple platforms, but I'm an independent trader. If the audio sucks, I apologize, but I brought a mic and it won't work, so I'm just using the built-in on my computer. The Orange County meeting is about 2 weeks away. Resident Inn and Suites, Tustin, Orange County. $400, 5 speakers, 3 days of great education. Greg Mills at GAM72054@AOL.com. Outside speakers, John Person, Dan Fitzpatrick, Chris White, and Matt Caruso. I talked to Matt today. We're all in. I can't wait. It's going to be a great event. If you attend the meeting, you'll get a significant discount on my app if you want to purchase it, which will defray most of the cost of your fee. And that's whether you're online or live in the room. You'll also get copies of the videos and my PowerPoints as well. Google Group, top-down trader. Let's go to Google Group, sign up. You'll get early notification of events, including the special program I'm doing at 10 a.m. on Memorial Day for the Words of Wisdom with Ian Woodward, how I apply HGSI in my nightly review, and how I integrate that with the Market MRI Pro tool. Know your news and earnings. We're going into Thursday, so we got jobless claims. That could move the market, a big move either way. PMIs, home sales, and then we got John Williams speaking at 2 o'clock. So it should be an interesting day. Thursday before the market, Analog Devices, BJ's, Advanced Auto Parts, Ralph Lauren. So there's still quite a few earnings to go. As it says in the lower right-hand corner, it's judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I will put the Zoom link in the remarks section if you want to come at no cost to the meeting that I'm having on Monday, Memorial Day. All right, so let's go into the daily brief section and let's let this load and take a look at what we're seeing in the market. So 4 different parts of this briefing. One will be performance of the main ETFs I follow, new high, new lows, and then performance of ETFs, themes, and then the market, what it looked like in the various indexes. So let's just rank it by one-day close, and the strength is probably going to be Bitcoin. Bitcoin and volatility, VIX up 6.78, closing near the high of its session. Bitcoin 1.46. And the dollar was down 0.42, but closed near the high of the session. So we'll probably see a candle that opened low and traded higher. The Qs, the spiders, both down about 1.5, diamonds down 1.93, and the Russell, the big loser, down 2.5%. We still have net new highs at 12 months on the NYSE, but on the NASDAQ, we turned negative. This is, I think, the most telling line, the percent advances. As you can see, almost no sectors and industry groups were positive. On the S&P 1500, 3% of the stocks were up, 17 on the NASDAQ, and 12 on the NYSE. So that gives you a sense of how bad and how broad the market negativity was. We look at one-day change. I think you'll see all the sectors were down. Leadership was from services, communication, staples, materials, and tech, and they're all down. Real estate led to the downside. Higher rates, not a good thing. And healthcare, after a one-day wonder, was back down. If we look at leading themes, blockchain, with the Bitcoin setting all kinds of records. silver, gold, uranium, copper, and then China. So not a very strong market day. In fact, quite a weak one. The buckets show that we're moving to the left, which means the stocks are getting lower in their Bollinger Bands. And we're starting to see some above, come up below the bands. But really at this point, not enough to make a signal. So definitely shifting to the left and weaker. The market breadth, I think it's got good news and bad news. You can see the deep down day on the NYSE and on the NASDAQ, but we're still holding above the 200. We were up in a straight line, and you're going to see pullbacks on the way to new highs. If we look here at the volume, it was a little higher than yesterday on the NYSE and on the NASDAQ, but not monster volume. You could see breadth deteriorated as stocks above the 20, 15, 200 turned down on both. And if you just go down this list, new high, new lows, positive on the NYSE, negative on the NASDAQ, as we saw earlier. Advanced decline lines turned negative, and up-down volume was negative. And there was no new signals, no Phoenixes, no Hindenburgs, anything nefarious popped up. If we go into the timing model, we do see some problems. If we go in the daily, you'll notice that we're still, and we'll talk about these trend lines and breaks in a few minutes, but you could see if we just look at the buy-sell signal on the bottom of each chart, the daily is holding. The weekly is very tentative. The spiders and the Qs are fine, but we lost the Bongo and we lost the WMA on the diamonds and on the Russell, and both of them turned negative. Now, the week's not done. As we talked about last week, the weekly bar isn't closed until probably around 4:15 on Friday, so it can still move back up. If we look at the index ETFs, there's a couple things that I see here. The first thing is the spiders and the Qs are holding up okay. As we talked about yesterday, they certainly have turned down, and whether it turns to be a flag, a retest of the 200, they also been pretty much respecting these trend lines. The diamond, on the other hand, broke through the 200 in the trend line and looks considerably worse. And even the Russell squirted outside of a wedge, which is a bad sign. So I'm a little bit negative, a little bit worried about the market right here. Now, is it over? Are we definitely going lower? No. But would I take any rally here, maybe as a chance going into the holiday to take some profits? I might. We can see the VIX moved up, and it's still pretty low, but it was up 15%. And the dollar opened, traded lower, and closed at the high of the session, but still a negative day, although it looks like a hammer. Looking at commodities, gold and silver are super strong and look poised to go back after new highs. Gold up 0.87, silver up 1.25. If we look at oil, failed the 50 once again and was down 1.56. Not good if the economy is weakening. And then natural gas and inside bar, but we saw what that did yesterday. Inside bars led to lower days today. And then I think the most worrisome thing is we've broken out on both the 10-year, which was up on the markets on Tuesday, 0.11%, and on the 30-year, huge breakout up even more, 0.61. So I'm a little bit nervous about the rates. Is that correct? What? Actually, the 10-year is up 2.5%. I'm sorry, and the 30 was up 2.41. All right. So my feelings right now is danger, danger, danger. We haven't rolled over and broke down yet, but I think the risk is much higher than it was on Friday. And so I've got some concerns, which means I still have some cash on the side looking to buy things cheaper. If we look at the ratio charts, we'll see that really nothing new outstanding. Bitcoin, not new, outstanding. Industrials are holding up. And you'll see at least the staples and the utilities turned up some. Healthcare, not, maybe, but real estate, because of the rates, turned down. So if you're thinking I'm going to go to my JAS layout and give you a lot of things to buy, you're mistaken. If we go into the top-down perspective just to take a look, and we look at percentage return, everything was down. The worst was real estate. If we look at any industry groups were up, this is all the industries, the only ones that were up on the 1 day percentage was packaged food. And I think that's just, there's a lot of them there, up 2.01, 24%. Investment banking services up 11.19. That seems hard to believe, but that's a mistake. That is a new group that hasn't been put into the rest of the groups. Never mind on that. Silver, non-alcoholic beverages, very defensive. Gold, precious metals, crypto, and oil, gas, midstream, which looks pretty negative, but I guess compared to the rest of the market, not as bad. Hard to believe how that's only up. That's up at all, but who am I to argue? All right. If we look now at the impulse view, you'll see my 3,500 stocks. And there are some things that were up. To point out a couple of things, XPEV, which is a Chinese auto manufacturer, a nice breakout here on massive volume. Breakouts, volume, momentum, gaps, everything you could possibly want except for a lot of earnings. It doesn't make money. Revenue dropped after previously being a lot higher. Earnings are out. They came out earlier today, and one wonders if they were better than expected. You could see a 93% surprise on the earnings, and that's why it popped up. Now, this also lifted another of the Chinese EVs, and that is NIU. These guys, both of these companies make beautiful cars. BYD is another one. I spent some time in Uzbekistan this year, and everybody drives a Chinese car. Here's LE Auto, another one of the Chinese guys. So that's just one group that was actually doing okay. I don't really see a lot to like. So let's flip and look to the short side. So I'm going to take my favorite scan, price, volume, and price. But instead of going 2-day up, let's look at 2-day down. And let's take a look at the stocks that we find and see if there's any themes here. Let's just go through them very quickly. How do I want to rank them? Hold on a second. And I'll just go through them. It doesn't matter. William P. Carey broke through the bottom of the wedge. That's bearish, but it's got the 200 within $1.05. I don't get too excited. $1.41 way. Tractor Supply breaking down. Constellation Brands just pulling back into the 50. Here's the trend. Here's what you'll see a number of home builders breaking down here. And that might be meaningful. It probably has a lot to do with that 30-year going up. And you could see earnings are out. You could see earnings reduced. This will be 294 versus 377, 442 versus 459. So there's not a lot of growth in those home builders here, and that might be coupled that with the rates, some of the concerns. Petco, I thought, was a real estate company breaking down. OCCI, credit card, cheap stock. Here's another home builder failing here. You kind of figure they're going to at least go down and test the prior lows. Lennar, another one. So you see the theme, KRG Real Estate, Kite Realty Group breaking down. Independence Realty Trust breaking down. FICO, I guess, does the something to do with home building. What's it called? The credit, whatever. FICO down 15%, big breakdown. DH Horton, another one that's down as well. So I'm going to make this short. I'm worried here. I'm not buying everything, a lot of contras yet, but I've got a list of them, and we'll see what the market does on Thursday. You might expect maybe a rally into the weekend, but I'm a little worried here about where this market's going. Sell in May and go away. Well, May's almost over. That hasn't worked of recent. And if I want to be optimistic, I did look at, let's see what I have it here. We take out my filters. I always do that. Oh, I got to clear them all. Whenever you don't see something you expect to see, your filters are probably on. The big stocks, the big cap tech held up fairly well. Amazon bounced off the 200, still flagging. APP really didn't do much at all, down 1.2%. Google had some nice news about AI and search and advertising. Actually was up on the session. Meta, tried breaking out of the flag, came back into it. Microsoft being pulled back a little bit, still within the Friday bar, or was that Friday or Monday? Yeah, Friday bar. Netflix hardly gave up anything. It was actually up $2. Nvidia pulled back a little bit, but hasn't really broken down. And even Tesla, which was down 2.6%, really didn't break down. So maybe there's some cause of optimism when the big cap techs are holding on. For me, I'm a little nervous. I do have some cash. As I mentioned last week, some of my things expired option wise that were fat with profits. I'm still holding what I think are the leaders: Palantir, Hood, Toast, and Sezzle. But my finger is very close to the sell button. Have a great rest of the week. I'll try and do a video tomorrow. Depends on how my meeting goes. I'm presenting to a meeting about artificial intelligence, AI, and healthcare. That should be fun. Kind of too old for that, though. Take care, everybody. Again, come see me Monday for a special video presentation.